Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top hodler on TradingView for many years, as well as being one of the only traders with a fully verified MyFXBook third-party track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump straight into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about EURUSD. Now, as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market, then I'll move to the commitment of traders analysis to see what institutions and the big players in the market are doing and how they are moving and shifting their orders, and then I'll put together these two different types of analysis. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical monthly demand and support zone. Now, from here in the past, all these previous rejections to the upside were created. Now, these rejections to the upside were fueled by very strong institutional buying, and we will speak about that in just a few moments. But let's keep in mind that, again, in all these years, in many occasions, the market has tested this zone and rejected it to the upside. Only once the market broke below that zone, but immediately that ended up being a fake breakout because the market immediately broke back above and continued then respecting the area as support. And we just saw yet another test of this exact same zone and a massive rejection to the upside. So at the moment, we're seeing another rejection to the upside away from this historical support and demand area. And as we will see, this is also fueled by institutional buying. So let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear. The first thing that we have to notice is that the inversion of trend here, it was quite straightforward. The market, if we have to follow this structure, clearly was creating lower lows and lower highs. We then had this double bottom created exactly at this zone. And now the market is shifting to the creation of higher highs and higher lows. So perfect inversion of trend, with this double bottom being the inversion pattern, which by the way was inside of that monthly demand and support zone that we have just seen. Now, if we have to identify the most recent price action, we have to notice how this area here, which was acting as previous weekly resistance here and here, which then the market broke to the upside and was turned support all across this zone, is now being tested once more. So we have previous weekly resistance now turned support, which the market is testing with a good probability of seeing yet another rejection to the upside. Because as we have seen, since institutions are already fueling this massive rejection to the upside, actually, as we will now see in just a few moments, there is good probability on a retest of previous weekly resistance turn support to see even more institutional buying. So let's drop down on the daily time frame, and before we get into the details of the daily, just a quick interruption. Let me know in the comments below if you have any new pairs or topics that you would like me to cover in the next videos, because I'm always open to suggestions. First, let's check the commitment of traders analysis. Now, if we're looking at the euro, the first thing that we have to keep in mind is that we are actually already looking at EURUSD, because all currencies on the spot are traded against the USD. And what we can see is that in the long term, institutions have shifted their positioning on EURUSD massively. We went from a negative net positioning with minus 51k net positions, so way more shorts than longs, to 121k shorts compared to only 170k longs, all the way up to now having a very positive net positioning, 114k net positions, with 252k longs compared to only 138k shorts. So we went from having more shorts than longs to now having more longs than shorts. So clearly, EURUSD has been longed aggressively by institutions. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this box here is the zone that we have previously identified on the weekly time frame as being previous weekly resistance turn support. Here in the daily, as the market is reaching this zone, it has also created a daily M pattern. Now, after the creation of an M pattern, what you expect is a rejection to the upside and for the market to go and complete the M pattern at the neckline. We have seen this pattern over and over again. Actually, another one was just completed. We had here the M pattern, what happened immediately after the market rejected and went and completed the pattern at the neckline. Now, obviously, as for every pattern, this is not every single time, but when we see an M pattern, there is an increased probability of seeing the completion. So in this case, we have an M pattern testing that support on the weekly. So there is good probability inside of here to see more institutional buying. So in a situation like this, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the CO2 data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames. So 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to complete this daily M pattern at the neckline. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the CO2 data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education, and I will see you in my next video.